Every few years, a Japanese company swoops in and pays too much for an Australian company. Japan Post paid way too much for Toll Group, Asahi bought CUB, Nippon Paint bought Dulux, and Kirin overpaid for Lion Nathan 15 years ago. But now Kirin is paying $95 a share, or $1.9 billion, for Blackmores, $400 million more than it was fetching on the market yesterday. Is it too much? Well, yes, going by history. And founder Marcus Blackmore and the board have all said, where do we sign? The rest of the share market lacked lustre today, with banks and CSL down, miners and retailers up. The US market also fell, although the technology stocks on Nasdaq went up. Speaking of which, I saw a graph today of research and development spending by the big US tech companies, so I inserted Australia's total in it. We come fourth. That's all of corporate Australia's spending on R&D, less than half what Amazon spends. On commodity markets, oil and precious metals fell, while the iron ore price went up, and the Australian dollar managed to scramble up to 66.3 US cents. All eyes next week will be on the Reserve Bank board meeting on Tuesday. The economists are split between another pause or a hike, and it does look 50-50. For context, here's a chart of this cycle of rate hikes around the world, and Australia is at the lower end, less than the US, Canada, New Zealand and the UK. And that's finance.